Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
All right, about 2 minutes away from the end of the trading day, 41.34 on the S&P 500. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to the closing bell, and here to help take us beyond the bell, our global simulcast starting now. Carol Massar, Tim Stenovec jumping into the ring, bringing together our Bloomberg Television, radio, and YouTube audiences. And guys, we're seeing a bid to the dollar, we're seeing a bid to the VIX, we're seeing a bid to treasuries, no bids into stocks.
No, not at all. We're just going to finish off our lows of the day here. And listen, Romaine, this is a day where I said I didn't have enough charts of my Bloomberg because I wanted to track things. The broader market certainly taking a hit. Those small caps in particular, Romaine, also taking a hit.
Yeah, that's right, Carol. We're actually seeing right now, look, this sell-off hit 2 days in a row. There are virus cases that are climbing globally, really hitting some U.S. companies hard, overshadowing some pretty good results that we've seen over the last couple of days. But the concern is that the virus, when it might be getting better here in the United States, if it doesn't get cured around the world, if it doesn't get treated around the world, we continue to see hotspots. That is going to affect the reopening globally.
And Tim, I think what we noticed yesterday was it was a sell everything day as yields were also higher as stocks came lower. And then today, Caroline, that changes. Bonds indeed do catch a little bit of a bid on the 10-year. We were down to the lows that we haven't seen since March 11. So really coming down just a little bit, 4 or 5 basis points across the curve.
The haven bid not only going into U.S. Treasuries, going into gold as well, as Romaine pointed out, going to the U.S. dollar. But this really does feel as though globally it was a sell-off too. Remember, Europe getting hit the hardest in 4 months.
Yeah, absolutely. 1777 on spot gold here in the U.S. right now. Taking a look at equities, S&P 500 looking like it's going to settle around that 41.34 level, down 0.7%. The NASDAQ composite down, you can call it a percent, 13.778 is basically where it's standing at the moment. The Dow Jones Industrial Average down about 0.8%. And the Russell 2000, that is your underperformer here on the day, down 2%, 21.88 on the Russell.
Listen, certainly some disappointment when it comes to earnings. We are front and center when it comes to it, and this is what investors are focusing on. I think they're very hesitant.
Yeah.
Listen, we've got Netflix coming out, Caroline, and that's certainly going to be our focus right now.
First quarter earning revenue meeting estimates, we understand. 7.16 billion is where we get the number for the fiscal first quarter for this juggernaut. 7.14 billion had been the estimate, so totally in line. Earnings per share, $3.75, ahead of expectations of $2.98. But what we want is the streaming paid net change. It was phenomenally lower. Romaine, 3.98 million added.
Yeah.
The market wanted 6.3. Netflix guided to 6 million. This is a big miss, Romaine.
Yeah, this is a big miss, and you wonder where folks got it wrong. A lot of analysts were starting to say that the street was a little bit too bullish on the prospects for this 6 million number here in this quarter. But to come in at under 4 million, that's a huge miss, guys.
Yeah, the company also guiding for the second quarter significantly below estimates, coming in at 1 million versus estimates of 4.4 million. As you mentioned, Romaine, those streaming paid net change in the first quarter of the year significantly below expectations. Stock is significantly lower in after hours, trading down more than 10%, Romaine.
Yeah, down more than 10% here. And look, I mean, this is a growth stock, and with it be a growth stock, you have to continue to see that growth here. I know, Taylor, you're digging in here. We need to kind of find out a little bit more about the cash situation here, because that was a huge component to this story. It wasn't just the streaming, but it was also the idea that that balance sheet was looking pretty healthy here. And this was a company, despite all the money that it was spending, Carol, that this was a company that still was managing to stay on level footing on that front.
Yeah, absolutely. And take a look at that stock. You guys have it up for TV, but for the radio folks, it's down about 11% here in the after hours. It was one of the high flyers in 2020. We definitely saw a little bit of a pullback coming into this year, certainly. Netflix, though, talking about the outlook, this is what we need to know. We knew first quarter was going to be a blockbuster number. We know that those numbers were kind of off the charts. We know the pandemic, and listen, from the get-go, they kind of said, we understand a lot of people are home streaming. It's going to be different once the world reopens. Netflix, though, saying, Romaine, that they continue to anticipate a strong second half.
I have a question for you, too, because, I mean, we talk about the big bump that we saw during the pandemic, and there was this idea here that this would be sticky, that essentially once we got out of the pandemic, we would still be continuing to watch Netflix and HBO Max and all these other streaming services. And I wonder, Carol, whether this is maybe an indication that once we get back out of the house, we don't need Netflix as much as we used to.
Well, listen, you got to believe either the airlines and the hotel owners say we're going to get out there and we're going to be traveling, or the Netflixes, et cetera, and streaming services say, Taylor, that we're going to be sitting home watching everything and anything.
As we do for our global audience in TV and radio, I described the charts that we show, and frankly, all you need to know on radio and YouTube is it does not look good, you guys. As I take a look here, as our team races to update this, fewer than 4 million subscribers, we should say. Reminder, that estimate was about 6.29, and really that second quarter, Tim, going forward, looking at 4.44, the company saying it'll just be 1 million going forward. I just want to bring you, Tim, update on the financials that we're getting. Net cash from operating activities, about $777 million. So that's better than it was the previous period. Free cash flow, $692 million. So they are looking to be 2021 free cash flow break even. But again, it really is that free cash flow number positive, almost $700 million. That, for me, looks above where analysts were looking at, but we'll have to dig through those numbers more.
Yeah, to the point that we were talking about earlier, where there is uncertainty as the country and the world tries to get past this pandemic. Roku stock is down too. I'll mention that as you said. Netflix continues, though, to anticipate a strong second half, but seeing some uncertainty from COVID-19 in the short term. Guys, I got to say, I've covered streaming for years. I've covered Netflix for years. The company prides itself on how easy it is to subscribe, but also how easy it is to cancel. So if you are done watching what you want to watch, you just cancel it so easily. There are no hoops to jump through, and that could be an issue if people run out of what they want to watch.
And here's the headline on the free cash flow that we were saying. Track for 2021 free cash flow to be about break even, as we're hearing from Taylor, an all-important number. But it's also about what comes in the second half in terms of content. Content is king. When you've got Disney Plus hot on your heels, when you've got the likes of Paramount Plus coming out, Discovery Plus, have you got the right sort of content? Stranger Things is going to be coming back into the mode, but at the moment, we are hearing that they are guiding for a stronger second half. These were tough COVID comps, Romaine. We've got to remind ourselves.
Well, Caroline, I think you raised this question with Tuna Amobi, CFRA, a little bit earlier here about this idea of competition. I mean, I look at my own household, and I mean, we have probably 5 streaming services on our TV now that we didn't have a year or two ago. And I mean, at some point, you're going to have to look at that and say, do we really need all these?
Yeah, exactly. We've done it. We've done cord cutting, but all of a sudden you start piling on the streaming services and you're kind of back there with a pretty hefty monthly bill. Caroline, I think you hit on it. We have to remember the comps. The last quarter, it was the most that we saw in terms of services added individuals, 15.8 million. That was off the chart, so you have to have some perspective. The other thing is P&G talking about raising prices. We have to see if Netflix on the call says that they've got some leeway to make up and that they're able to start charging customers more. We'll see, Taylor, whether or not that can happen.
Yeah, we also, they're talking about repurchasing some stock, guys. This might help bump the stock up a little bit more. 5 billion common stock beginning 2021. So they're going to be putting their cash to work, not only on content, but also repurchasing some of their stock overall. They say the first quarter streaming paid memberships were 207 million, slightly below, again, the estimate of 210 million. I'm interested, Taylor, to understand the regional breakdown, because where the growth is meant to be coming from is not the US anymore, which is meant to be about 500,000 for the fiscal first quarter. But we were looking for EMEA to pick it up, for LATAM to pick it up in particular. I want to know the regional breakdown.
That is the top 5 question that we are getting from analysts of Lightshed Partners. We know him well. What needs to happen to get India to 50 to 100 million subscriptions? That is his number 5 question on the call, Caroline. So I think you nail it as we think about international growth. I've increasingly heard, not quite verifiable, it is those international customers that create the higher margins. The US customer is a little bit less sticky when you think about a profitable customer. How do you get that when international and the competition has really been increasing, Romaine?
Yeah, absolutely. And when we talk about the broader market impact here, this obviously could weigh on sentiment tomorrow. But keep in mind, this isn't a highly weighted company in the S&P 500. I think it's ranked something like in the 20s or 30s here. So it will have an impact, but not the type of impact that if we had seen an Apple or an Amazon miss like Netflix missed today.
Hey, one thing I'm going to be looking for on the call today is any commentary about content production, because we know that content production has been slowed down globally due to the pandemic. And if there's nothing to watch on Netflix, then you're quitting Netflix. And that's the issue that the company faces. So a big question that I have is how the company is going to continue to bring us that new content as more and more places are opening up, but also there are hotspots emerging and they're trying to juggle this during the pandemic.
Yeah, Romaine's going to put down My Octopus Teacher and he's going to go straight over to HBO Max, where he's going to be looking about pottery, apparently. That's where it's hot. But overall, we are still seeing strong margins coming from this company.
Have you seen this pottery show? It's on HBO Max, by the way. I've been a convert. I wasn't into HBO Max. I saw it. It's British. You would like it, Caroline. You like everything British, right?
Seems niche. I do. Great British Break Off, a great pottery throwdown. I'm all into all these things.
Yeah. All right,
I'm
guys.
still trying to finish Lupin at the moment, so that's
Lupin.
my Netflix calling.
Yes,
but
yes.
So you will be streaming. That's the bottom line.
Yeah, more to that.
Carol's got us figured out.
All right, Discovery and Disney a little bit lower in the aftermarket, too. We're going to have to be watching for news on theirs. All right, that's going to do it for our cross-platform coverage of the closing bell on this Tuesday on Bloomberg TV, Bloomberg Radio, and YouTube. We'll see you same place, same time tomorrow.